Inflation is a silent threat to your retirement, an invisible force that slowly erodes your purchasing power, leaving you with less than you expect when it's time to enjoy the fruits of your hard work. If you're like most American retirees, you're looking for ways to ensure that your wealth doesn't lose value as the cost of living continues to rise. This video will explain why inflation is a constant concern and show you how to protect yourself from it. Right now, inflation is hitting nearly every part of our economy: gas prices, groceries, healthcare, and more. As a retiree, this is particularly concerning. You've likely spent your career building up a nest egg, and now that you're retired, your primary focus is making sure that money lasts for the rest of your life. Unfortunately, inflation doesn't stop just because you stop working. In fact, it can even accelerate, putting pressure on your retirement savings. But the good news is, there are ways to fight back against inflation and protect the value of your retirement savings. The first step is understanding how inflation affects your purchasing power. Imagine that what you could buy with $100 a few years ago now only gets you $90 worth of goods. This decline adds up over time, and if your retirement funds are sitting in cash or traditional bonds, they're vulnerable to inflation's eroding effects. So what's the solution? One of the most effective ways to protect your wealth against inflation is by investing in tangible assets that hold or increase in value over time, like gold. Unlike cash, which loses value due to inflation, gold has historically maintained its purchasing power over the long term. It's a hedge against inflation that has stood the test of time. Now, if you're serious about protecting your wealth in the next 2 weeks, I highly recommend clicking the first link in the description below to grab the free gold IRA guide. Thousands of Americans are turning to gold IRAs as a way to safeguard their retirement savings. The process is straightforward, and if you have $100K or more in an IRA or 401K, or even $5 in savings, this guide will show you how you can benefit from this strategy. Gold IRAs aren't just a way to protect against inflation. They can also help you diversify your portfolio and reduce the risk that comes with stock market volatility. Traditional assets, like stocks and bonds, are often correlated to market performance. When markets fluctuate, so do your retirement savings. But gold tends to move independently of the stock market, providing a stabilizing factor in your portfolio. If you've been relying on savings accounts, CDs, or traditional investments, you might have noticed that they aren't giving you the returns they once did. With interest rates staying low, these assets are barely keeping up with inflation, which means your savings are effectively losing value. But by converting some of your IRA or 401k into a gold IRA, you're positioning yourself to hedge against rising inflation and growing market uncertainty. But it's not just about inflation. The geopolitical landscape and economic instability can also play a role in how your assets perform. Gold has been a safe haven for investors during times of crisis, and when other assets falter, gold typically shines. This makes it a perfect option for retirees who want to ensure their wealth is safe and secure, no matter what happens in the world. So, if you're serious about protecting your wealth and want to take control of your retirement, consider diversifying with a gold IRA. It's a proven strategy to defend against inflation and keep your savings safe. And if you're someone with 100K plus or more in your IRA or 401k, or even $5 in savings, this could be the perfect move for you. Don't wait for inflation to take a bigger bite out of your retirement. Click the first link in the description now to get your free gold IRA guide and start securing your wealth today. Protect your hard-earned money, protect your future, and make sure that when you retire, you can actually enjoy your life, no matter what inflation throws your way.